Charlotte has been perhaps the nation's most surprisingly strong apartment market over the past couple of years, and as expectations keep increasing, Charlotte keeps exceeding them. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Charlotte update. Charlotte continues to rank among the national leaders for rent growth, while occupancy is at historically high levels. Let's start with the rent growth story. Rents up 2.1% in the quarter, one of the best in the U.S. Year over year, rents up 6.3%. That marks 4 straight quarters of rent growth around 6% or better, the best stretch ever seen here. And the most recent hike placed Charlotte 4th nationally among large markets, in a tie with New York, behind only the Bay Area trio of San Jose, San Francisco, and Oakland. And in Charlotte, rent growth has been strong across the board, especially in top-tier properties. Units built in the 1990s and in the 2000s, year-over-year rent growth around 7%. And of Charlotte's 14 submarkets, 11 logged year-over-year increases of 5% or better. And that's coming as apartment demand remains very strong, even as home sales are showing double-digit year-over-year growth. Occupancy surged 100 basis points in Q3, and it's up 160 basis points year over year to 95.9%, the highest rate here in 6 years, and the second best rate Charlotte has seen in 14 years. And among markets in the south region of the country, Charlotte tied with Fort Lauderdale for second place, behind only Miami, and just ahead of Nashville, Baltimore, D.C., and Austin. And like rents, we're seeing strength in occupancy across the board. All of Charlotte's submarkets have occupancy rates right around 95% or better than that. And that leads us to what's helping drive up these numbers. One of the reasons a lot of analysts were very worried about Charlotte coming, in the recession and coming out of it, is that Charlotte added a lot of new supply between 2008 and 2011. In fact, since 2008, only Austin, nationally, has seen greater inventory growth, so proportional increase in supply, than Charlotte. Charlotte's apartment base has expanded 13% since the start of 2008, with the addition of nearly 15,000 new apartment units during a period of an economic downturn. And yet, these recently built apartments have leased up surprisingly well, much faster than expected, and they're also achieving strong rent growth of late. This distribution chart here is mapping out occupancy rates in the 58 sampled properties we have that were built since 2008, and you can see that nearly half of them have occupancy rates of 99% or better. Another 24 of them are between 95 and 98.9%, and just 5 properties under 95%, and all of those are above 90%. And that's only excluding properties built in Q3 2012 specifically. So with all of that new supply, units built since 2008 are, on average, 97.3% full, and again, that excludes only these most recent quarters completions. And just as impressively, demand for all this new product hasn't sapped away demand for older apartments, and you can see that occupancy in units built prior to 2008 also climbing sharply, now at 95.9%. So how has this happened? Well, a couple of reasons we've talked about them before. Let's summarize them quickly for you. Number one, a lot of people have wrongly labeled Charlotte as a busted banking town. The economy here, a lot more diverse than most people think. Finance jobs represent less than 9% of the job base, and of the banking-related jobs lost during the downturn, most of those have already been recovered, and most of the banking jobs lost by the big banks in Charlotte were actually outside of Charlotte. And number two, incomes are climbing briskly here. Hourly wages up 5.2% in 2011 compared to the U.S. average of 2.1%, and they're up 3.1% for the year ending August 2012, a very good sign for the economy. And by comparison, just FYI, wages have been steadily falling in Raleigh. That's one reason Charlotte's pulled ahead of Raleigh. Now, all that said, apartment developers are taking notice. Construction is way up. 3,915 units underway at the end of Q3 2012, the highest number since 2009. Now, that's still less than half of the pre-recession peak, but there's no doubt that number will keep increasing. And that's going to be the biggest headwind going forward. It's highly unlikely Charlotte's going to be able to sustain these kind of numbers going forward. Charlotte has done surprisingly well, but it's still Charlotte. It's not the Bay Area. And so we're going to start to see some normalizing going forward. We're projecting that occupancy is going to hold flat year over year at 95.9% before easing later in 2013 and 2014. And rents, we're projecting growth of 5.2% year over year, and that number should continue to ease a little bit as well over time. So that wraps it up for Charlotte. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.